MP Materials operates at a critical intersection of geology and modern technology, and the company is the largest producer of rare earth elements in the Western Hemisphere. It owns and operates the Mountain Pass mine in California, a significant source of these vital materials. Rare earth elements are not necessarily rare in the Earth's crust, however, they are difficult to find in economically viable concentrations and even harder to process into usable forms. These elements are indispensable components for a vast array of advanced technologies that define our current era of innovation and progress. The importance of rare earths cannot be overstated. They are essential ingredients in the high-performance permanent magnets that power the motors of electric vehicles. They are also crucial for the generators in wind turbines. Wind turbines are a cornerstone of the global transition to renewable energy sources. Beyond green technology, these elements are found in consumer electronics, like smartphones. They are also in hard drives. They're used in critical defense systems, including guidance systems and sensors. As global economies pivot toward electrification and decarbonization, the demand for these materials is projected to grow substantially. MP Materials' business model is structured in 3 distinct stages, each designed to capture more value from its mineral resource. Stage 1 involves mining concentration. At the Mountain Pass facility, the company extracts bastnäsite ore. Bastnäsite is rich in rare earth elements. This ore is then crushed and processed through a flotation circuit to produce a rare earth concentrate. Historically, a significant portion of this concentrate was sold and shipped to processors in China for further separation. The United States lacked the domestic capacity for this crucial next step. Stage 2 represents a pivotal evolution. This stage involves the separation of the rare earth concentrate into individual rare earth oxides, including the highly valuable NdPr oxide. To achieve this, MP Materials has been investing heavily in restarting and upgrading its on-site processing facilities at Mountain Pass. The final and most ambitious part of the plan is Stage 3, magnet manufacturing. To understand the health of MP Materials, an examination of its recent financial and operational data is essential. As of Q2 2024, revenue stood at $73.1 million. This was a significant increase from 2023 lows, which were heavily impacted by a sharp decline in global rare earth prices. The revenue rebound was primarily driven by a recovery in NdPr oxide prices and higher sales volumes. This price sensitivity is a core business characteristic investors must monitor. Profitability metrics add further insight into operational efficiency. In mid-2024, adjusted EBITDA was $21.9 million. Adjusted EBITDA strips out non-cash charges and other items and indicates core operational profitability. Improvement in adjusted EBITDA shows leverage to higher commodity prices and better control of production costs. Production volumes are another critical progress indicator. Q2 2024 production: 10,979 metric tons of oxides in concentrate. Stage 2 separation progress: produced 452 metric tons of separated NdPr oxide. That 452 tons is a key number, tangible output from downstream investment. As of June 30, 2024, approximately $785 million in cash and cash equivalents. The market for rare earth elements is shaped by powerful global trends, primarily the transition to a low-carbon economy. The single largest driver of demand for NdPr is the production of permanent magnets for electric vehicle motors. Pie chart showing the primary end uses for NdPr, with EV motors and wind turbines largest segments. An average EV can use between 1 and 2 kilograms of NdFeB magnets. With global EV sales projected to grow from around 14 million units in 2023 to potentially over 50 million annually. By 2030, the demand for NdPr is set on a structural growth trajectory. This direct link to vehicle electrification is the central pillar supporting the long-term demand forecast for MP Materials' core products. A second major driver of demand is the renewable energy sector, specifically wind power. Direct drive wind turbines are increasingly favored for their efficiency and lower maintenance, and they rely on large quantities of permanent magnets in their generators. A single multi-megawatt offshore wind turbine can contain several metric tons of NdFeB magnet material. As countries around the world expand their wind power capacity to meet climate goals, the demand for rare earths from this sector is expected to rise steadily, providing another significant and long-term source of demand for the materials that MP Materials produces. The geopolitical landscape is arguably the most important factor influencing the rare earths market. For decades, China has dominated the global supply chain, controlling a large share of mining and an estimated 90% of the world's rare earth separation and processing capacity. MP Materials possesses several distinct strengths that form the foundation of its investment case. Its most significant asset is the Mountain Pass mine itself, a world-class deposit, high concentration of rare earths, particularly NdPr. Owning and operating such a rich and long-lived resource in a stable jurisdiction provides a durable competitive advantage. This geological endowment means a secure and cost-effective source of raw material for decades, a foundational requirement for long-term success in the industry. The company's location in the United States is a powerful strategic strength. Geopolitical tensions are rising. Manufacturers are growing wary of supply chain disruptions. A domestic source of critical materials is highly attractive, insulated from international shipping disruptions and foreign export controls. This advantage is amplified by supportive government policies on onshoring critical mineral supply chains, provides regulatory and financial tailwinds, including direct government funding. Vertically integrated strategy is a key differentiator. Mining concentrate separating oxides, Stage 2 manufacturing magnets, Stage 3. This integration captures value at every step. It promises higher profit margins and reduces exposure to volatile intermediate product prices. An investment in MP Materials is fundamentally a long-term bet on the continued electrification of transportation and the growth of renewable energy. For an investor who believes these trends will persist and strengthen over the next decade, the company offers direct exposure to the critical materials enabling this transition. The core thesis rests on the assumption that demand for NdPr magnets will grow robustly and that MP Materials will successfully execute its strategy to become a fully integrated mine-to-magnet producer. This makes it an interesting option for growth-oriented investors with a high tolerance for risk. A practical reason to consider investing is the company's unique position as a non-Chinese scale producer. For manufacturers and investors seeking to de-risk their supply chains and portfolios from geopolitical tensions, MP Materials represents a strategic asset. Its long-term contracts, such as the one with General Motors, provide some degree of revenue visibility and validate its business model. The successful ramp-up of its Stage 2 separation facility is the most critical near-term catalyst. Progress here would prove its technical capabilities and unlock significant value, transforming its revenue stream from lower-margin concentrate to higher-margin separated oxides. Conversely, there are clear reasons to be cautious. The stock is likely to remain volatile, trading in close correlation with the spot price of NdPr. While its cash position is strong, the capital required to complete its Stage 2 and Stage 3 ambitions is substantial. Looking ahead, investors should closely monitor separated NdPr oxide production, Fort Worth magnetics plant updates, revenue, adjusted EBITDA, realized REO prices, and any new long-term offtake agreements with major automotive or renewable energy companies.